Welcome to the Money and Investing Show. This space is all about managing money and kickstarting you into the world of investing and finance. A series of bite-sized episodes designed to simplify and equip you with the tools on how to get you started, along with some tips and tricks for those already investing. Stay tuned for today's episode with your host, Dale.
Hey guys, Dale here, and welcome to our very first episode of the Money and Investing Show, and also a Happy New Year to all those listening. I'm excited for what we have in store for you with the show and what the year 2021 is going to bring. Today's episode is going to be all about investing and why I think everyone should be equipped with the knowledge and the ability to be able to grow their wealth through the share market. Let's get into it. So I thought I'd start today's show just by taking everyone through why the show was started and what the goals of the show are, and hopefully some of the things that you can take away from listening. I'll then move into a bit about who I am and my investment journey, some of the wins and some of the failures I've had, and hopefully I can start to teach quite a lot through that. So 2020 was a bit of a crazy year, wasn't it? We started the year out with bushfires. We then moved into a global pandemic and we saw the country go into lockdown. And if you're like me in Melbourne, you saw extended lockdowns and a lot of time indoors. And so one of the consequences of this and the fear and the uncertainty of what COVID was going to bring saw the fastest bear market in ASX history, which is when the share market drops below 20%, and it only took 14 days. We also saw the fastest recovery in history. And some of the other things that we saw while we were in that is that new investment accounts skyrocketed, and they were fueled largely by lockdowns and people being stuck indoors, government stimulus just continuing to add to the economy, and a lack of sport and social interaction. So people were actually taking the money that they would traditionally spend on either going to live events, going to see friends, or gambling on sport and putting that money into the market. And while some got really lucky, a lot of investors were stuck trying to catch a falling knife and actually ended up losing money. And some studies show there wasn't a lot of method to the buying, with a lot of investors citing FOMO for their buying decisions, which isn't always a great way to make a decision about a stock purchase. So, part of this show was really around how to help people make some better decisions when it comes to investing. Some of the benefits of investing for the long term, which is a philosophy that I like to follow, and some of the reasons why you should do it and why you should stick with it if you are one of those that lost some money early. So to follow on from there, I'll do a little introduction of who I am and my investment journey. So as I said at the top of the show, my name is Dale. I'm a dad in my mid-30s. I've got a 1-year-old daughter, so I'm not getting a whole lot of sleep at the moment, but I'm getting it where I can. I love the outdoors. I love fitness and sport, and generally speaking, Melbourne's a great place for all of that, pending the last year or so. And I've always had a really strong passion for sort of finance and investing and an interest in my money. So to follow on from there, I'll take you through a little bit about my investment journey. And I suppose from a young age, it was always drummed into me by my parents that you put your money in the bank and you save up your money and you put that towards buying your first house. And I largely followed that advice throughout my 20s, working pretty hard, putting away a fair bit of my income into savings accounts and term deposits. And back when I was doing that, I think term deposits were earning quite a bit more than they do today. I think I was able to get around 6% on my money back then, which is really good. And so from there, I managed to purchase my first apartment when I was roughly 25 years old. And it was there that I really started to realize that it wasn't just property that I was interested in. It was about how to build a whole investment portfolio, which led me to the ASX and how I got started there. So to start to get into the crux of what the show is all about, why invest in the stock market? And more importantly, what are shares or securities? Shares are basically the ability to own a portion or a share of a company that is listed on the stock exchange. By purchasing a small portion of a company, You are then entitled to share in the company's profits and long-term growth. Sounds pretty good, doesn't it? Think about that just for a minute and what was just said. You can essentially own a part in some of the world's greatest companies and the greatest minds while they work hard to give you a return on your money. And so to put a bit more of a tangible example to that, I'll use Apple as an example. So everyone knows who Apple are. They've either got a phone or heard of their phones, and most likely you're listening to this podcast through an Apple device. And so imagine if you were an Apple shareholder when the iPhone was first launched and Apple's profits skyrocketed. If you were a shareholder in Apple at that point, your wealth would have grown as the company grew. And even today, Apple continues to grow their company's profits. And so if you were still an Apple shareholder, your profits are still growing in line with that company. And I can hear you saying, well, that's great, Dale, but aren't shares a little bit risky? What happens if I lose all my money? And while shares can be a little risky, there is a lot of ways that you can minimize those risks. And I'll go into a few of those strategies in some future episodes. But essentially, the market will always have a lot of short-term fluctuations in its price. But it's shown over a long period of time that investing is one of the greatest ways to increase your wealth. A great illustration of this is to look at the Vanguard 30-year index chart. And I've popped a link to this in the show notes for you to check out after this. But it shows on average the Australian share market has gone up by about 8.9% per annum for the last 30 years. And what's even more astounding is that if you had put $10,000 into the Australian Shares Fund in the year 1990, your money would now be worth $130,000 today just by letting it sit there and accumulate. And how is that possible? It sounds great, but it's thanks to the magic of compounding, which is my second reason for why you should get started in investing. I'm sure most of you have heard of Albert Einstein, one of the great thinkers of the 20th century. He once called compound interest the eighth wonder of the world and stated those that understand it earn it and those who don't pay it. And essentially compounding is what occurs when you let your interest accumulate on your interest. And combined with rates of return and the time frame is what really grows your wealth. And what do I mean by that? And I'll give you a bit of an example. But say I had $10,000 that I wanted to invest, and I put that into the stock market and I got a 10% return on my money for the first year. I would then have $11,000 at the start or the end of that first year. So $1,000 that I've made in interest and $10,000 that I'd put in initially. And say I don't touch any of that money and I just leave that $11,000 invested, and again I make 10% return in my second year. I'm now making 10% on both my original $10,000 plus the $1,000 that I had at the end of year one. So by the end of year two, my money has now compounded to $12,100, which gives me a return of 21% over a 2-year period. So if I was to leave that there for 10 years, my original 10,000 would now be worth over 23 grand, which is pretty good. And if I take it to a longer time frame, so assume I left that money there for another 10 years, it would then be worth $61,000. So you can quickly see how compounding over time continually adds up, and it's one of those things that the longer you leave it, the more that it grows exponentially towards the end of the time frame. So it's really a long-term thinking point of view, compounding. So when we put this into an investing context, I think the one key takeaway about compounding is that the sooner you start, the better. If you can take anything away from this first episode today, it's that getting started early is really what drives long-term results. And lastly, my final reason for investing in shares is that it doesn't require a lot of upfront capital like other asset classes do. So something like buying a house, you can get started investing in shares with as little or as much as you like. So with the rise of some of the micro investing apps that are out there today, you can start investing with literally just a couple of dollars. There's some that sort of minimum $50 and then they sort of go on from there. But it's really accessible to anyone at any investment point or whatever they want to put in. So over, purchasing a house, which might require saving up a 20% deposit and, banks, conditional approvals and all of those sort of things, it's really, you can get started with as little money as you require. And also shares are very liquid, meaning that it's really easy to buy and sell in and out of positions. And it's really only takes a few clicks of the mouse. So if you ever were required to get the money back really quickly for whatever reason, it's very readily available to be able to buy and sell. So I hope that makes a pretty good case for why I think investing's a really good way to go about growing your wealth. And over the next few episodes, I'll be taking you through how to figure out what kind of investment style works best for you, how to research some stocks that you might want to purchase, and how to actually purchase them through to finding a broker and making that first trade. And that really wraps us up for today. I hope you've enjoyed the content provided, and hopefully I'm able to help you take something away each week that helps you on your investment journey. Join me in next week's episode where I'll be discussing some of the basics of investing and what can actually be invested in. And if you liked what you heard today, please hit subscribe to the podcast or leave me a review. I'd love to hear from you guys. So I'll leave you with a quote today from Benjamin Franklin, who once said, "An investment in knowledge pays the best interest." And I think it's a really great quote because when it comes to investing, nothing will pay off more than educating yourself. If you do the necessary research and analysis before making investment decisions, you'll find that you'll have a great future.
Please remember, the information and opinions provided in this podcast is general advice only and does not constitute financial advice. This podcast was created without knowing individuals' needs, financial situations, or investment objectives. The host of this show may hold positions in the companies discussed. Please remember, before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.